This was the start of the darkest period of my life. I became depressed. I lost my motivation, It was really a terrible time. But finally, in investing world, pessimists always lose. So if you are a pessimist, if you think, the crisis is around the corner, there will be a great recession, next year and so on, you will just wait, and you will never invest. You should never follow these doomsayers, people who are very pessimistic, because the markets tend to go up over time. Why? Because of the money printing. Central banks are printing money all the time, and they cannot stop. I learned in my career that the most profitable thing that you can do when investing is basically just...
Welcome to the Swedish Wealth Institute podcast. I'm Daniel Wood, your host, and we have an absolutely amazing episode for you here today. Robert Rolih, author of The $1 Million Decision, is going to share with you how you can avoid some of the incredibly high fees that banks and financial advisors are sneaking on you and stealing your future. This is a very powerful episode, so listen, learn, and continue to grow. One of our missions here in the Swedish Wealth Institute is to make sure that you have all the tools you need to reach your financial goals, to live that absolutely amazing life you deserve. We do that by connecting you to the best speakers, mentors, coaches in the world, like obviously today with Robert Rolih, or as in earlier episodes with Nick Vujicic and Joseph McClendon III. Please make sure you subscribe so you don't miss out on any of the upcoming episodes, like next week when we meet Les Brown, which will be absolutely amazing. In addition, we're always trying to find ways to do something extra for you, to give you as much value as we possibly can. So today, we've created a quiz where you can learn your wealth archetype. You got the link in the show notes. By taking this simple quiz, you will learn what is your wealth archetype, what type of projects or investments or businesses should you be considering, and who should you be learning from to make sure that you reach your goal as easily as possible while staying in flow, working to your strengths. This quiz is absolutely amazing. It's completely free. The results are completely free. This is just our gift for you to allow you to get that little extra to reach your goal. Now, with no further ado, let us learn from Robert Rolih, author of The $1 Million Decision and one of the best investors I've ever met. Here we go. Welcome, Robert. So, Robert, you say, a lot of investors, they lose most of their gains without even noticing it. What's going on? What are you talking about? And what do you do differently to kind of get around the system?
Yeah, small fees you pay when investing can lead to big financial problems. In my book and in my seminars and webinars and so on, I basically show how even a regular investor, someone investing just 5,000 euros or dollars or 10,000, can easily lose over €1 million or dollars by the time they retire. And why is that? Because of small fees, commissions and fees, and sometimes also a bad choice of products, products that the financial industry is pushing and trying to sell as fast as possible. So these small fees, at the first glance, they don't seem like a big deal. But when you get into details, you see that small fees compound over time. And in a 10-year period or 20-year period, they become huge. If you want, I can give you a practical example of that.
Yeah. Walk us through it.
So let me give you an example of my youngest son's school teacher. Last year, he invited me to his class to give a talk about personal finance and investing to a lively group of 10-year-olds. And after the presentation, I gave my book to all the students, and he also took one. And then after a couple of months, he contacted me via email, and he said that he checked his investment account. So he read the book, and then he checked his investment accounts, and he realized that something really terrible is happening in his investing accounts, So then he sent me the reports and everything, and we went together through his investment accounts, and we realized that in the several years he has been investing with his financial advisor, he was basically just breaking even. So he had zero net gains. But the stock market during that period went up by 40%. So I won't tell you how much money he had in his account.
Yeah,
Let's say
but
that
so
he
he'd
had
been saving every single month. He'd been
yeah, he was
investing
saving every
just as
single
you're
month
taught and you're supposed to, and
with
the
the help of this
entire
financial
40%
advisor.
profit had been stolen from him.
Yeah. So if he had, for example, 100,000 in his investment account, he was basically breaking even, but the stock market went up 40%. So this means that he lost $40,000 because, of high fees, because of maybe bad choice of products and so on. So this is just one example of a financial life that was saved because of my book and everything that I do. I try to teach about commissions and fees and other stuff. To as many people as possible. Just imagine, if he went on like this until he retired. He would basically have a lot of financial hardships, But because he got this information, because he read the book, because he started to pay attention, to these details, now he will have a very, very nice pension pot when he retires, So it's a complete change of financial life, and entire life, So this is really a huge, huge, huge thing when it comes to investing. You need to pay attention to these details, Small fees can compound over a long time period, and this is a big problem for a lot of people who are not paying attention.
Yeah, and I mean, this is when the market was going good. The problem with these fees is they still run even when the market goes bad. So,
Yeah,
then
financial
you
industry and advisor, they charge you this fees all the time. If the market goes up, if the market goes down, it doesn't matter. They always charge you. They always make money.
yeah, they get paid. All right,
Yeah.
so I definitely want to break down, like, what are the fees? What do we look out for? How can they get away with charging all this? Before we get into that, give us, like, how did you discover this? What was your experience? Were you like, wait a sec, this is happening to me. Wonder if this is happening to other people. Like, what was your aha moment?
I was an entrepreneur. I started from scratch in my in a student dorm, and after 5 years, I started to make quite a lot of money. But at that
What was
time,
the
I was
business?
totally
What were you
financially
running?
illiterate. I didn't have a clue about personal finance and investing, and
Right.
but I knew that I should invest part of the profits that I'm making. So I trusted financial advisors and bankers, and I gave them all of my profits, every single year. And after years and years and years of doing that, I had a conversation with my wife, Sarah, and she said, Robert, maybe let's just check, what is happening with all that money, let's see where we are, where we stand. And I ordered all these account statements. And when the envelopes arrived, it was like, what? Are there some zeros missing? Money. I worked hard. We worked hard together with my wife, day and night, over weekends and so on, was mostly gone. And that was a total shock for me, and this was the start of the darkest period of my life. I became depressed. I lost my motivation, it was really a terrible time, but finally, if I, cut the story a bit shorter, this was also a turning point in my life. I started to learn all there is, this is where, when I made a decision, I will become one of the most financially rich people in this world, no matter what. So I started to learn about personal finance and investing. I read more than 300 books. I talked with a lot of financial industry insiders. I went to all the best seminars, workshops about investing out there. And that basically led me that I realized that the financial industry is not our friend, that they are not on our side. They should be working with us. Our interests should be aligned, but they are not. Unfortunately, they are not. All they care is how to make as much money as possible, and they take this money out of our pockets. And it would be okay, if it was a bit of money, just a tiny bit of money, but it's a huge, huge, huge amount of money that they are taking from all the investors. And When I started to invest on my own, I took control over my personal finance and investing. I took my investments, to another level, and it was very profitable. And I started to make a lot of money when investing. And then I realized that most people around the world have the same problem. They are trusting their financial advisors or bankers, or they are investing in very bad financial products, the ones that the financial industry is pushing because they are the most profitable for them. A lot of people are losing a lot of money. And that is why I decided, okay, maybe I should start educating people about this topic, And that was the beginning of my story, as a personal finance and investing educator.
Amazing. So what was that first company you were running where you were making money, but not getting the value? What was that company?
So I started in the student dorm. I started with web design. So I learned how to code a bit on my own.
Right.
These were the early days of internet,
Right.
So I learned how to create websites, and I started to offer this service to entrepreneurs. And at first, first year, second year, it was not so profitable. I was breaking even. But after that, I became very, very successful. I learned how to sell. I learned how to market myself. I learned how to package these services. And my company grew and started to become very profitable.
And then you didn't get to reap the rewards. So
unfortunately, all its value was eventually lost.
Yeah, exactly. So what are the fees? Like, so if I'm investing now, let's say I have savings. Let's use the $100,000 as an example. Like, what fees? And if I'm not comfortable like doing it all myself and reading 300 books and all this, like, what are the fees I need to look out for? What are the biggest thieves?
Okay, the key fee that you need to understand is the management fee. Okay, this is a fee that is taken from your account every single year. So, for example, if you invest in a mutual fund, this fee can be 1 or 1.5% or 2% every year. Okay, so this is the management fee. The same goes if you have a financial advisor. He or she usually they charge 1% or in this vicinity per year. So this is the management fee, and this is
Right.
the biggest.
And there, the financial advisor. Let me ask there.
Yes.
So a financial advisor can advise you to invest into funds that also charge a fee. So now you're being charged double fees.
Yeah. That's
Okay.
correct. But let's take a look at a simple example, so that you understand, so that everybody understands how much these fees can really drain your accounts. Let's say that you have a portfolio of 100,000. Okay. And you don't add anything. You just stick with 100,000, you invest, now, and then you just leave it for 10, 20, 40 years, okay? For your pension or whatever. Now, 1% fee per year means approximately 1,000 per year, okay? So 1% management fee out of 100,000 is 1,000. Now, this 1,000 is taken out of your account and is not growing anymore. So over time, this 1,000 would grow quite a lot. So, for example, if you have 8% annual growth rate, for example, 8% average gains per year, now historically, the stock market produced approximately 10%. So I'm very conservative here, okay? So 8% per year. So if you had invested that 1,000 that went out of your accounting fees over 30 years, that would amount to 10,000 euros or US dollars. Okay. So over 30 years, 8% growth, 1,000 becomes 10,000. Okay. And this is just 1 year of fees. And you need to compound all these years, together. And over 30 years, what happens with your money? Basically, because of this small 1% fee, you lost more than 120,000 US dollars or euros, because of this small 1% fee. So this is the compounded amount of money that you lost because of this small fee. So it's more than your initial investment, okay? And this is the real cost of being in a product or being with a financial advisor for a prolonged period of time when you have these small fees. And this is, most people don't understand this, and it's hard to understand because we just see maybe 1 year fee. We see 1,000, and we can't comprehend that this in 20-year time or 30-year time, that this will grow a lot, So 1,000 over 30 years, if you just have 8% growth, is 10,000. And altogether, if you account for all these 30 years, you lose more than 120,000, because you have 1%.
Well, let me devil's advocate here, though. So let's say, because now if I am the investor, I put away 100,000. If I'm making 8% a year and I'm, so to speak, giving away only one, that means I still keep seven. So over that time, my 100,000 will still grow by a lot in theory. If it's going to grow that much, why is that 100,000 such a big deal? Because I know there's more to this.
Yeah, you just need to think about the alternative. What if you just invested in basically the same product, the same thing, but with 10 or 20 times lower fee? You would basically, when you retire, you would have 100,000, 200,000, maybe 500,000 if you invest more, more on your account. And this could mean the difference between a comfortable retirement and maybe a lot of financial problems, when you get to retire. So yeah, it sounds little, but over time it really grows by a huge margin, and it can basically create a lot of problems, for people.
Yeah. And of course, the big problem is they get paid whether the market is going up or down. So if the market goes down, they're still taking that out.
Yeah, it's
actually
even,
hurts your account
if
even
the
more.
market, if there is a financial crisis or recession or whatever, these management fees are, even worse, because the market goes down and then also they hit you with these fees. So you start to lose a lot more. And it's very hard to recover after that. In my home country, I come from a very small country of Slovenia, and a lot of people were investing in our home market and the neighboring countries and so on after we gained independence in 1990s. And because these markets, in the financial crisis of 2008, 2009, they went down like 80 to 90%. They still haven't recovered, because of all these fees and because the market went down so much, and they're still underwater. But if you have invested in a simple, low cost global ETF, so these are the index funds, these are funds that have very, very, very small commissions and fees, you would recover your investment already in 2013 or 14, and now you would have like 200 or 300% profit. So this is, this is a big difference, having a 200% profit or maybe 50% loss, So it's a huge, huge difference.
Yeah, that is huge. So, but let's say for me, let's say I don't know anything about investing now, and I'm really afraid of making the wrong mistake, right? Of investing in the wrong product. And obviously, this is why I would hire a financial advisor to help me. So now that I know that the fees are going to cost me my retirement, like if I'm listening to this episode now, I might be going, well, I'm screwed either way. Either I'm going to do the wrong thing and I'm going to lose 90% and then maybe have 50% less, or I'm going to be losing hundreds of thousands because I'm taking advice. Like, what can I do? I'm stuck in between a rock and a hard place. Like, what do I do? Like, what is the third alternative?
Yeah, the third alternative is to maybe take a couple of hours to learn these things and then start to invest instead of these high fee investment products. You can just start to invest in simple, low cost ETFs. So these are very similar products to mutual funds. Most people invest in mutual funds because their financial advisors tell them to. So index funds or ETFs, these are basically the same type of investment vehicles. This is simply a basket of stocks. You are investing in a big basket of stocks, let's say 500 stocks or 1,000 stocks at one time. But the commission or the fees are like 20 times lower. And that is how you keep the lion's share of the profits, and very, very, very little goes to the financial industry. But if you, of course, invest in these high fee products, then the lion's share of the profits will go to the financial industry and you will be left with breadcrumbs.
Right. So essentially right now, if I'm using a financial advisor and I'm realizing I'm being screwed over, what I could do is I could look at what mutual funds are we investing in right now? Like, are we doing, the European market, the US market, like what industries? And then what I could do is just withdraw all my money from that and put it into the same markets, but using an ETF instead.
Correct.
And that would take out my financial advisor and all these big mutual fund fees.
Yeah, and if you want to really simplify things, you just invest in a global ETF. My wife, for example, she just invests in a global ETF, a global index fund that covers all the industries and all the regions. And that's it, and she has an amazing returns, she has amazing returns, and it's simple. It's really as simple as pie, and that's it.
And what is the fees on an ETF? Like, what should I be expecting to pay?
In fees?
Yeah.
Yeah, so ETFs have fees that are lower than 0.2%. Okay, so if your ETF or if your index fund has a fee of 0.2% or less, it's okay. Okay. Now, mutual funds, on the other hand, they have fee that is 1%, 1.5%, sometimes even 2 or 2.5%. And that's terrible. This kind of fee will basically rob you of your savings over the long period of time. So yeah, just as a rule of thumb, 0.2% or less is perfect.
So you've obviously taught, thousands of people. Can you share a story of someone who was really uncomfortable with the financial markets, that like, this isn't for me, I'm not good at math, I'm not good at these things, who you taught and is now doing exactly what you're telling us? Give us some hope.
I will give you an example, a strange example. My father, he when I started to do these things, and educate people and so on, he was still investing in mutual funds. and I tried to convince him. He was, old school. No, I'm trusting my financial advisor. No, it's perfectly okay. Even though he read my book, he just wouldn't budge. But after years and years and years of just investing in mutual funds, he started to realize that, when I showed him my returns and then his returns, he was shocked, And then finally, after years and years and years, after, I started to, when I was telling with him, this for years and years and years, finally, I think it was like 4 years ago, he said, okay, Robert, let's try with index funds, let's try with ETFs, And then he basically sold all of his mutual funds. He started to invest in index funds. And then after a couple of years, when I showed him, the comparison, what would he have if he stayed in mutual funds and what he has now, he was totally, wow, amazing, this is really, he was a hard nut to crack, because he was really traditional, and even his own son couldn't change his mind, But after that, he came to his senses, and he did that right move, and now he's really happy. He's always now telling me, that was a great decision.
What ETFs, what index funds should we be investing in? Like, what's a good portfolio?
Yeah, so if you want to really simplify things, I would just go for a global ETF. Simple as pie, My wife is doing exactly that. And she is just adding new fresh money to this one global ETF, and she's perfectly happy. And her returns are amazing. Now, if you are a bit more aggressive, you can also add technology. There are ETFs that are focused on technology companies. So these are all these Amazons and Teslas and Googles and so on, Palantirs and so on. So you can basically be a bit more aggressive, with technology investments. Then if you are a bit maybe older and you want to get a lot of dividends, so if you want to get monthly income through ETFs, you can think about dividend ETFs. These are ETFs that are investing in a basket of stocks that are paying out constantly very high dividends. So these are more established companies, very profitable companies that are constantly paying out big dividends. So, for example, if you have 100,000 in this kind of ETF, every year you will get 3,000 to 4,000 out in dividends. So
and that's actually paid out to your account.
Yeah, this is paid out every single year, approximately. You can never know how much will be because of the market movements, but your investment is still there. But this is annual income for you, annual dividend income, and if these companies, only these big companies, are profitable, and they are, you will constantly have this kind of additional income through dividends. So this is, but of course, the growth of the fund, of the price of the fund, doesn't go up as much as, for example, the technology fund, because they are.
So it still goes up, just not as quickly.
Yeah. So, and we are talking about long time periods. You can never know what will happen in 1 year or in 2 years. Maybe there is a crisis, maybe there is a recession or whatever. But over a long period of time, for example, 10 years or more, you can be pretty sure. You cannot be certain. There are no certainties in investing. But if you think long term, stocks will very likely outperform everything else, bonds and gold and pay deposits and so on. Because when you invest in stocks, you invest in companies that are constantly innovating and bringing new value to this world. And that is why stocks in the past have outperformed everything else by far. And I don't see a reason why this should stop, this long-term trend, why it should stop. Okay, maybe aliens will invade and then we're all screwed,
but that nothing matters. Yeah, right. World War III, then it doesn't matter what you've invested in. Yeah.
In this case, it will not matter what you are investing in.
All right, but that's really cool. So I'm thinking now for my parents, for example, who are retired, they could put their savings into a dividend ETF, and then they would have a monthly income, which means it might not be enough to cover all their expenses, but it means they don't have to sell off shares as quickly.
Yeah, correct.
Cool. And so other assets, obviously you said now that stocks are the most exciting, but do you do anything else in your portfolio? Do you have any gold? Do you have any bonds? Cryptocurrencies? There are crypto ETFs now. Do you use any of these?
I use all of this for myself, and also I teach this, in my courses. So let's go step by step. Gold, I don't treat gold as a growth investment. So I don't invest in gold because I want nice returns. Because gold historically has just kept pace with the inflation. Okay. Now, in the last couple of years, gold really skyrocketed. But these are, it doesn't happen often. Gold can have 10-year period of just doing nothing, and then it can go up, quite a lot. But if you miss the move, you missed it.
Right. So buying gold now would not help because it's already moved a bunch.
Yeah. So gold.
Probably. I mean, we never know, but probably.
In my portfolio, gold is only for additional security or safety in case the world goes really into some kind of strange problems.
Are you buying physical gold then? So you have it,
physical,
or are you?
Physical. Yeah.
Right. So you're not. It's not a part of your ETF portfolio. You don't do a gold ETF. You'll have some physical gold stored that if you need it, you have gold coins to trade for money.
If the world ends, if we have some Mad Max scenario, mushrooms, and stuff like this, then the gold will be valuable because you will be able to barter with it and so on.
But that means you need to have the physical because no one's going to want your gold ETF.
Paper gold doesn't help you in these kind of situations, So I have gold, some gold, not a lot, but just, in case something really terrible happens. And I hope that I will die with that gold. Okay. Yeah. I hope that I will just, leave it to my kids when I die, and that's it, because this will mean that nothing really terrible happened in the world. And I never intend to sell this gold. So I don't really care about, if it goes up or down in price. So this is gold. Okay. So just for additional security, and it's very, very small part of the portfolio. Then bonds. Bonds are okay, but I am too young for bonds. I'm 17 years old now. So I think that bonds are useful when you are maybe, 65 or 60 years old, when you are nearing retirement, just to give your portfolio a bit of stability.
And for anyone listening, just a bond is basically a loan to a government or a company, and you're getting a fixed interest. And based on how interest rates go, the value of the bond can move a little bit. But essentially, you're being a bank and getting
It's a very
small
safe,
interest back.
very safe investment, basically guaranteed investment, but it produces very, very small returns. Maybe, I don't know, 2% return per year or something like this. So these are bonds.
If you're lucky, it outperforms inflation. If you're lucky,
yeah, it can basically go along with inflation, but that's basically the same thing as with gold. If you take a look at a long time period. So these are bonds. Currently, like I said, I'm not investing personally in bonds because I'm too young. Because if your time horizon, so for example, if you are now 50 years old, and if you intend to maybe, I don't know, retire when you are 70 or 65, this means that you still have 15 to 20 years of investing left. And there is almost 0% chance that bonds will outperform stocks over this kind of time period.
How would you compare using bonds compared to the dividend stocks as someone older?
In general, bonds will lag. Bonds will lag, will give you less in returns compared to dividend ETFs.
But so for like my parents who are retired, what would you say? Like, should they put in bonds some and put some in the dividend ETF, or would you put 100% into the dividend ETF, or why not?
So yeah, I'm not a financial advisor, so I cannot advise them.
Right?
But,
No. Also, more
I
hypothetically,
can tell them what I would do. I would stick with maybe most of my investment in the stock market, but then gradually increase the bond part of the portfolio as you grow older and you want to be a bit more conservative. Okay. Now, what is the percentage? This is, this varies based on your own, situation and so on.
Okay, cool. And how about like cryptocurrencies?
Crypto is quite a big part of my portfolio, and also my members. We are investing in crypto. Here, the important thing is that you should not overinvest in crypto. So it's a significant part of our portfolios, but not too much. We are not investing as much money as in the stock market, in the crypto market. But here in the crypto market, crypto is the future, of course. A Bitcoin is a digital store of value, is a digital gold, is gold for new generations. So the Bitcoin has a special place in the crypto market. It's basically comparable to gold,
but in a good way, because we didn't like gold as gold.
Bitcoin is basically improved gold for digital age. So nobody can print more Bitcoin. You have a set supply of Bitcoin. There will always be maximum 21 million Bitcoins. And nobody can print a Bitcoin just like they print US dollars or British pounds or euros. They print them all the time. And that is why these fiat currencies are losing value, because if you have more cash in circulation, it's worthless, of course. Okay, and this is inflation. This is the loss of purchasing power of our currencies. So Bitcoin is a great hedge against inflation. And because the war on crypto is over in the United States, it also has a legal and a government stamp of approval now, and this is super important. So the United States waged war on crypto until the beginning of this year. Now with the new administration, this totally changed. And everything is now legal. America is welcoming crypto companies, and this industry is really booming now. So it has, I think, it has a really, really, really nice future. Yeah, one part of our investments are in Bitcoin. This is like we said, digital gold for the new generations. And the other part of our investments are in, I call them crypto infrastructure projects, or crypto business projects. These are, for example, Ethereum, Solana, Sui, Chainlink, and so on. Bitcoin doesn't produce anything. Bitcoin is just a store of value, okay? But these projects, infrastructure projects or business crypto projects, these projects are similar to stocks. okay, because they are producing value. They are building value. Let me just give you a very simple to understand example. So, for example, Ethereum or Solana, these are platforms, blockchain platforms, and thousands of developers all around the world are building different apps on top of their technology. So it's like Windows or iOS operating system. And there are thousands and thousands of developers who are creating financial apps, business apps, entertainment apps, and so on, fitness apps, and so on top of this technology. And it's the same in the crypto space, So this ecosystem will grow. And as this ecosystem grows, also these platforms will, of course, gain in value. And that is why I'm also investing in them.
All right. So another part I'm really interested in is, there are theories like how to buy. You mentioned your wife. She buys, she just puts money in every month into her ETF, which means she's just kind of averaging in, right? Dollar cost averaging in over time. You don't do that with your students. You kind of time the market and read the market more. What are you doing? How do you do it?
So I'm doing both. So we are doing basically both. We are regularly investing, but we always keep some cash on the side in case there is a great opportunity. Let me give you an example. April 2025, Trump tariffs, chaos, there was like the end of the world. Everybody thought we are going into recession. All the headlines, were screaming recession, stock market is going down. It was terrible, everybody was selling. And at that time, I issued free buy signals during that time. And I was buying, my members were buying because I saw this as a great opportunity. Everybody was selling, everybody was scared. The fear and greed index went to 4. 4 out of 100. That's, unheard of. That's like the financial crisis level of fear in the markets, And we did a lot of investments back then with our cash reserves. And we, have amazing returns because we had the courage to invest when nobody else wanted to invest, when everybody was selling, So this is, something that I call the reverse psychology of investing. So when there is a panic on the markets, I always keep some reserves, cash reserves to invest at that time. And this really can pay off a lot,
All right. So two follow-up questions there. The first is, how much should you be holding in reserve? Because obviously when it's in reserve, it's not working in the market. So how much do I keep outside of the market? And the second is, when do I know it's time to buy? Because like there in April, as you said, the world was ending. But if I had waited and thinking like the world is going to end a little bit more, I might have wanted to wait till May. But by then it bounced up. Like, how do I make sure I'm not investing in March before it had totally crashed, but not in May and miss the boat? Like, how do I figure out that April now is the time?
Yeah, good question. You never know. You never know about these things in advance because nobody knows what the markets will do in a short period of time. But I gave 3 signals, and the first one was a bit early. The second one was a bit early, but with the third one, we hit basically the bottom. That was like, I think it was 7th of April when the stock market went to the lowest point. So you never know, you can never know in advance. But, with experience, with different kind of thinking, or maybe going against the herd, you can basically hit good levels, You can never know if you will hit perfect level, but you shouldn't care about that, So this is how we do it. And the second thing, how much to keep in reserves. I always keep in reserves for example, if you are investing, let's say monthly, okay, keep maybe 2 or 3 months worth of cash on the sidelines, and then just invest regularly, the rest.
Okay, so if, let's say I'm investing $1,000 a month, just a round number. So I would put
keep maybe
2,000-3,000 to the
2 to
side.
4,000 on the sidelines. And when the opportunity like this happens, at that time I'm buying, and then I'm slowly accumulating some more cash reserves.
Right, and then I refill that buffer.
But
so
in the meantime, if I have too much cash reserves, I invest them regularly. Okay, so never wait, with all of your cash, for a period of time, because the markets tend to go up. I'm always in investing world. Pessimists always lose. So if you are a pessimist, if you think, the crisis is around the corner, there will be a great recession, in next year and so on, you will just wait, and you will never invest. I had a member from Australia who joined my course in, I think, 2017. But he was investing through the financial crisis of 2008, 2009. And he lost a lot of money. And then he was so scared that he started to read all these he started to follow all these doomsayers and doomsday books and so on. And he never invested in the stock market again, And he kept all that cash on his bank account. And then when he joined my course, he said, I know that I made a mistake, because I see that the markets went up like 200% from the time, and I'm still having my cash in the bank that does nothing. You should never follow these doomsayers, people who are very pessimistic, because the markets tend to go up over time. Why? Because of the money printing. Central banks are printing money all the time, and they cannot stop. And this money eventually ends up in the markets, in the stock market, in the real estate market, and so on, in crypto market, and so on. So if you are waiting for years and years and years to invest, you are doing something wrong.
Right. So when you got these buying signals, so let's use $1,000 a month. Let's say I put away 4,000, and you had this first, you had 3 buying signals in like a month, right? How much do I use each time? Like, because I would be worried, like, if I used everything on that first one, then I missed the other 2. So like, how do you then use these 4,000?
Every time that I give buy or sell signals to my members, I tell them, how much I'm investing. So it depends on the market situation and what we are doing and so on.
Right. So you will read the market and kind of say, this is a good but not great, so let's take a third of our reserve. This is a once in a lifetime, go all in. This is right. Okay, that makes sense. So what are the buying signals? You obviously mentioned the greed fear index. That's just a Wall Street number that shows you how much fear there is in the market. Is that your main? Are you using other tools? Like, what are you looking at?
Yeah, I'm looking at the headlines. Media headlines are super important. I look at the market sentiment from social media. I'm looking at the tweets or X posts or most X, because X is the most important platform for investors. And then, of course, fear and greed index, and also how the fund managers are positioned. So this is a very interesting signal. Usually, if fund managers should be the smart money, should be the people who know what is happening and so on. But in reality, they are the down money. they are basically the hurt. And if they are scared, this is a good sign that it's a good time to buy.
Right. So you're actually reading people and saying, they're afraid, so I'll be brave. And when they're brave, you say, now I'm afraid.
Let me give you one example of media headlines. 2022, the crypto market was dead. Nobody wanted to invest in Bitcoin. Bitcoin went from 66,000, it went down to 16,000. At that time, this was the November 2022. Nobody wanted to invest in Bitcoin. And Jim Cramer, this is a famous TV host on CNBC, he had a show and he said, get out of crypto while you can. cash out, get out of crypto while you can. And this was basically a contrarian signal for me. At that time, at 16,200, we were buying Bitcoin heavily. And now we are sitting on huge gains, from that time. And yeah, it's this was one example, when everybody was saying like Bitcoin's going to zero, get out of Bitcoin and so on. Bitcoin was really suffering. And I said, okay, now it's a good time to buy.
That's fine. Yeah, I've heard the Jim Cramer index. Whatever he says, the opposite is gonna happen. So yeah, that's a good one. What is a financial habit that you do like every week that we could use to kind of duplicate a little bit of what you're doing?
You need to be patient. One thing that you need when it comes to investing is being patient. If you are trying to trade all the time, getting in and out of the market every week or every month or every day, day trading and so on, this usually ends up bad. So I practice patience, and I learned in my career that the most profitable thing that you can do when investing is basically just doing nothing. For a prolonged period of time, you do nothing. And just from time to time, like in April this year, you pull the trigger, and that's it, But you don't need to do that every day. You don't need to trade every day. You can just do maybe, 3 to 5 trades or whatever you call them, per year. And you will be much, much, much more profitable than people who are trading, all the time. And you will also be more calm because people who are trading all the time are very nervous, and they spend a lot of money doing that and so on, and time doing that. So yeah, I just practice being patient, and this is one of the most important things to do, doing nothing. But it's hard. It's hard. It's very hard to do nothing,
Yeah, I can imagine. So basically, keep cool, keep calm. And then when everyone else is freaking out, now's the time to build my portfolio.
One of my members recently sent me an email, and he said, that he really appreciates my constant updates that I sent to my members via email. And he said, please keep doing that as often as possible, because it's very hard to do nothing. I wanted to sell my investments in the first half of the year, and it was a great thing that you kept us, in line, and that you said, just be calm, the markets will recover and so on. So yeah, it's very hard to do nothing, because the media is constantly bombarding you that something bad will happen, and it's very hard to speak up. You need to be calm, because otherwise you lose.
Cool. All right. I want to ask you this. A lot of, you were talking about social media, and, a lot of accounts share, just financial advice that's been shared for, tens of years or hundreds of years. What's a common money tip that we should stop following, and what should we do instead?
Good question. Maybe I would say everybody is basically looking what is the next big thing, what is the next hot stock, or what is the next hot meme coin that will give me 100x my investment or whatever. And these things very rarely play out. Usually people who are influencers and so on, they're pumping some coins, crypto coins or some stocks, because they own them and they want them to go up. And very rarely this will happen, So I'm never chasing, the hot opportunities. Let me give you an example. Palantir stock went up like 1,000 to 1,500%. Everybody is talking about Palantir in the last months, but in one of my programs, where we are also investing in new technologies, in individual stocks, we are basically putting part of our portfolios, a small part of our portfolios, into individual stocks. We bought that stock, 2 years ago, when it was like the price was 10 times lower, but at the time nobody was talking about Palantir, and when everybody starts talking about a certain stock, it's usually too late. We took a lot of profits, recently with Palantir, but a lot of people are basically investing now in the stock, but while we are taking profits, So it's never okay to chase the next hot opportunity because usually you are too late, you're usually you are too late.
How did you identify Palantir 2 years before everyone else?
Our first thing, we also invested in some companies that it didn't work out. It's always like this in investing world. If you are investing in individual stocks, you will have some winners. If you can choose right, you will have some winners. And we had some big winners, and that is why our overall portfolio went up like crazy. Okay, but because we also had some losers, this money was basically lost, So we also lost a bit of money, but it doesn't matter because our overall portfolio skyrocketed, okay, because of a few winners. And this is the thing, So yeah, if I go back 2 years, how did I identify Palantir? I just saw that they are in the artificial intelligence trend. They are artificial intelligence services company, not hardware, but software. And I saw that this will be the big trend for the future, But like I said, if you choose 10 individual stocks, you can be pretty sure that maybe a couple of them will basically go down or do nothing. But if you only have a couple of winners, this can really boost your portfolio and you can have great returns overall. So my strategy, for this new technology part of my portfolio is to invest in a basket of individual stocks that are usually not covered in index funds because these are younger companies. And for example, when we invested in Palantir, it was not included in S&P 500 at that time. Only later, they included Palantir in S&P 500 index, and now all the people who are investing in ETFs are also investing in Palantir. But when we bought it, it was not included, because it was a company that was not big enough. And yeah, this is the strategy.
And of course, as soon as it takes that step and all the ETFs put their money in, then it shoots up in value.
Then it shot up, So we were buying Palantir when it was at 13.6, I think, 13.6, and then it went up to almost 200,
Wow.
So, yeah.
Nice. So what is one investing book besides your own, you're not now allowed to mention your own, that you would recommend everyone to read?
How a Second Grader Beats Wall Street, Alan Roth. So How a Second Grader Beats Wall Street. And it's an amazing book, It also talks about these commissions and fees. And it really is a deep dive into how ETFs work, how index funds work. So it's a really good read.
Nice. Cool. What is one metric you check every single week without fail?
Fear and Greed Index. Fear and Greed Index, yeah.
Cool. If you decided to retire today, what would you do?
Oh, I will never retire. I would be bored to death, Retiring for me is a no-go because I don't see myself, going on a Caribbean island, drinking tequila and doing nothing. It's just not me. So I intend to work until I can, So I love doing what I do. I love doing all these things, for my members, for people around the world. And it would be really boring for me if I stopped doing that, So I will just keep doing this.
That's well, it's as they say, if you're doing what you love, you never work a day in your life.
Yeah.
So
yeah. I'm fortunate that I found this in my life. I started as an entrepreneur in a totally different area. I was good at marketing, selling, leadership, and stuff like this. I created also an educational company for business skills. But then, things turned, and I lost my money, and I decided to go into this, to dive deeper into the personal finance and the investing field. And now I'm here.
Yeah, we're happy you're here, right? So what's next for you in the next 12 months?
Currently, I'm having a lot of these podcasts. I hired an agency in the United States to connect me with a lot of podcast hosts. And this is like a major project for me. And they started to do this very successfully. So I'm really happy. They already arranged 5 podcasts for me in just a couple of weeks. So yeah, I try to build my brand. I try to get the word out, especially in the United States, because United States, I come from Europe, but United States is a really big market, for investing. It's the main market for investing. So yeah, I'm trying to get the word out in United States, getting to be a guest at as many podcast shows as possible, and yeah, getting the word out. Yeah.
Awesome. Awesome. So, Robert, you obviously know we love spoiling our community. We love spoiling our listeners. So, you've prepared a gift for everyone that has taken time to listen. Tell us about that, and then we'll share the link to that in the show notes, of course.
So I'm preparing a webinar or a masterclass. It's 90 minutes, and I will teach you at this masterclass everything about ETFs, commissions and fees, how the reverse psychology of investing works. I will give you a lot of examples, how you can make a lot of money using the reverse psychology of investing. And I will also share my top investments for the next 5 to 10 years in this masterclass. So it's really a lot of great value. And yeah, I really, really recommend you to get the webpage that we will post and to register right away because I only have several dates available, and this would be really worth a lot if you are investing or if you are only starting to invest. So if you want to get amazing returns with your investments without short-term trading, without taking excessive risks, this is the next step. This is the next thing to do.
Awesome. And I know you've spoken at our summits lots of times. I know our students have had amazing results. So for everyone listening, it has my stamp of approval. That will be absolutely awesome. I appreciate it. We'll share it in the show notes. So make sure you grab your spot. There are multiple dates available. So get one as quickly as possible, and you can go even deeper with Robert on these questions. And because it's a live masterclass, there will even be chances to ask you some questions directly through the chat and talk to you. So that is absolutely amazing. Robert, thank you so much for joining us today. And
thank you for inviting me.
Yeah, we'll have you back soon. Thanks a lot.
Bye. Thank you.
Thank you so much for joining us today. That interview with Robert was so fun to do. I learned so much. I hope you did as well. And again, thank you so much for listening to the Swedish Wealth Institute podcast. We hope you keep returning over and over again. So please hit that subscribe button so you do not miss on next week's episode, where I am interviewing Les Brown, which I am so excited to do. He is one of my big inspirations that I'm so looking forward to learn from, and I hope you join me on that. As we keep repeating, the Swedish Wealth Institute is all about supporting you, helping you, and connecting you to these absolutely amazing people. So for this week, I wanted to end this episode with a very special surprise. So I want to give you a ticket to our upcoming event, Your Path to Financial Freedom, 7 Steps to Success. We have invited 22 of the top speakers in the world, including Robert Kiyosaki, Les Brown, Nick Vujicic, Joseph McClendon III, Jack Canfield, Brian Tracy, John Azareth, Dr. John DeMartini, and Rob Moore of the Disruptors podcast. Some absolutely amazing speakers that we're going to learn from over these days and get just incredible, incredible value. The event is 4 days, and you'll be learning about every step. If you follow these 7 steps, how you will reach your goals quicker and easier. I want to give you a free ticket to this event. You have the link down in the show notes. Now, we have 2 different options for you. The 9th to the 12th of October, we're doing it in the European time zone, so you can claim your ticket if that works best for you. If you're in the United States or Canada, we have one in that time zone, the 23rd to 20th, which means it'll fit better for you while being in the middle of the night for our European listeners, and vice versa. So pick the times that work best for you. We want to give you this ticket as a thank you for listening, as a little bit of an inspiration to click that subscribe button, because every single episode we continue to give you free things while introducing you to the top speakers. And as I mentioned, next week I have the honor of interviewing Les Brown himself, one of the most inspirational speakers in the world. So please do not miss that episode. You're absolutely going to love it. Thank you again for listening, See you soon. Les Brown is a legend in motivational speaking and a best-selling author who's moved audiences for decades. Get ready for stories that push you to act.
Trust me on this. Whatever you're going through, I've got a saying, as life knocks you down, try and land on your back. Because if you can look up, you can get up. I'm saying to you, this is not the end of the story. There is more in you. Continue to push. Don't stop.